based out of Stockholm, Sweden, Spotify AB is trying to become the de facto streaming service for music, podcasts, and video. Will they make it, or will they be swallowed up by all the competition? Welcome to another video. I know you're probably sick and tired of hearing about Spotify these days, but I wanted to give you my take on it, and who knows, maybe I'll consider the stock sometime in the future. Now, of course, as always, I'm adding timestamps in the video so you can jump ahead to any part of the video you'd like to watch. Drop me a comment with your thoughts on Spotify, like, subscribe, but most importantly, sit back and relax. This video on Spotify stock. Now, I know Joe Rogan just joined the service, but do not buy the stock based on this piece of news alone. Do not FOMO into the stock. You need to have a thorough look at the underlying business and its growth opportunities before even considering putting your money into the business. Now, it's run by Daniel Eik, a young Swedish billionaire. He founded the company and has been at the helm for 14 years since 2006. So this is a pretty classic tech story so far. It's available in 79 countries all over the globe. It has about 283 million monthly active users, and 130 million of those are paid customers, paying $9.99 a month for Spotify Premium. This is what makes Spotify stand out from other services like Twitter, Instagram, Snapchat, or Pinterest, where that makes all their money through ad money. So this is very nice to see. And Spotify is everywhere these days and occupies the lucrative top of mind with all of us. So whether you have a phone, a PC, a TV, a Tesla car, whatever, and you're listening to something, chances are it's Spotify. So it's really up there with Netflix and Facebook, where if you think about music, you're thinking about Spotify. So it has become a word almost synonymous with music. Spotify IPO'd back in 2018 at $165 a share, or a $28 billion valuation. The stock has had quite an uneventful run since then, going pretty much up and down and sideways. And the stock price is currently at $190. It recently got a boost because of the news of Joe Rogan, the biggest podcast in the world, joining the platform. Now, it's not unusual for tech IPOs to have a bit of a rocky start, as there's a lot of fear about rich valuation, insider selling, or rumors about the young tech upstart CEOs. So it's usually a bit of a shakeout phase, then all the insider selling lockup ends, and then the stock can start having a nice run. But so far, so good. The most important thing, however, is not the stock price, ladies and gentlemen. It is the underlying business and the growth of it, more specifically user growth for Spotify. So over the last 4 years, premium users has grown from 48 to 130 billion. Lately, it has grown about 5% a quarter, which is fantastic. It has even accelerated lately. And overall users has gone from 123 to 271, doubling in just about 4 years. So that's a 25% compound annual growth rate. So the growth, there's nothing to really take away from Spotify there. Listeners spend about 25 hours listening to Spotify every month, with about 44% of users listening every single day. The company has issued a great outlook for user growth in 2020, and they want to end the year at about 330 million active users, 50 million more than today, 20% growth, and about 140 million around there paid users. So they think the user growth is going to continue, and why shouldn't it? And yeah, average listening hours together with the number of artists each user enjoys has continued to grow in tandem, meaning people are discovering new artists through playlists and the Discover feature, one of Spotify's strong parts. And Spotify leads the pack in terms of paid subscribers in the music streaming industry with about 35% market share, but it has big competition from Pandora and Apple in the US, and Amazon, Tencent, and YouTube internationally. Spotify is, pulling away from Apple in terms of subscriptions, but Amazon and Tencent are gaining slightly. And there's a bit of variation here, like Apple is making more money per user, with its lucrative ecosystem, but Spotify is growing faster. Some of the other players are growing faster, but they're making less money, and it's all a bit of a mess now because there's so many players and so many metrics to keep an eye on. And of course, although revenue per user is important, I personally put user growth above that at this stage of the company, because more users equals more leverage, which can be used to attract new content creators to the platform, with the prime example being Joe Rogan. I don't think Joe Rogan would go to any other platform simply because of the numbers that Spotify is pulling. But the revenues are okay, and financially the company is quite sound at least, which is still unusual for tech companies. Look at Snap and Twitter. So revenues has gone from 2.9 billion in 2016 to 6.7 in 2019, pretty good. And from this revenue, the company generates about $1.7 billion in gross revenue, but they do lose about $186 million in negative net income. They generate about $245 million in cash flow, which is incredible, and they've amassed just about $650 million in cash. So, margins and expenses has a lot of pressure on them, and expenses has increased as of late, every year actually since the beginning, but that is to be expected, and it's also almost something you want to see. You don't want spending to taper off when there's so much growth opportunity for the company. So it's not all sunshine and rainbows for Spotify, as big competitors are taking market share and leveraging their existing ecosystem and devices to take users away from Spotify. That's why I think it's important that Spotify keeps the lead in paid subscribers, because that's where the money is. People will not tolerate ads when they're tuning out to their favorite music or in-depth, nerdy podcast. There is enough ads already, especially on the radio and on YouTube. So I'm looking at paid users and how much of the revenue is generated from that. And so I think that's the most important metric. Besides the competition, one challenge for Spotify is going to be their move into video content. They're trying out some podcast video content, but creating organic growth is really, really difficult. And users tend to choose which platforms become popular and what type of content they enjoy on each platform. So although almost every streaming platform offers multiple types of content, they're usually reserved specifically for one type. So people go to different services for different content types. So I think this can be a tricky one, but I think it's worth a try. And the CEO Daniel Eik predicts that in the future, so some years down the line, over 20% of all content will consumed on the platform will be non-music or non-audio content. And why not go for it? I think video can open up more lucrative ad spending and will be able to attract new content creators to the platform and expand, increase the time people spend on Spotify, and make sure that when people think video, they might think Spotify in the future as well, not just YouTube. So I think it's worth a try. Now, as far as original content and getting into, being a record label, let's put that on ice for a while and let's see where it goes. Those avenues are important because they're avenues of potential growth for the company and for investors. People don't want to invest in a one-trick pony, at least not over time. But take it all with a grain of salt, because all the competition is looking at the same opportunities to make money, and they have leverage behind them. What I think Spotify has going for them though is the paid subscription, because I don't think people will pay for 3 different music streaming services, because some of them has more podcasts, some of them has more video. So unless there is a bundle coming, I think the paid subscription is everything. And if they can execute on video or original content, if people already pay for Spotify, they will obviously give it a try. So they do have a lot of exposure they can use to promote their original content or some artists they're acting as record label for. So, I'd say go for it, but make sure you execute on music and podcasts first and foremost. That's your bread and butter. Don't, look at all the pies in the sky, especially not as an investor. So overall, I think Spotify puts out a solid story. It has a strong brand. It's top of mind with consumers. They have strong user growth, subscription growth. They got a founder CEO. It's financially sound, and they have a lot of potential revenues open for them. So if this story is fleshed out a little bit more, and I can sort of see where Spotify is going from being just a music streaming service, I might consider buying some shares. But please give me your insight on the company. I feel like a lot of you guys and girls will have more insight on this company than I do. It just popped up in the news, and it's just a compelling story. And if they continue to grow and they pull away from the others with their paid subscription model, I think they will leave the advertising platforms in the dust. So going to be interesting to watch this one. Hope you enjoyed the video, and as always, I'll see you guys in my next vlog.